p.m. and have some really great things I'd like to work with you and show you today, and walk you through some techniques that will, over time, hopefully with some discipline, help you to become a net profitable trader, and that dream that you have for yourself, and for those of you that are already consistently net profitable, afford you opportunities to increase your profit factors, increase your win ratio by utilizing data mining practically in the markets and institutional instruments that you trade. Okay, so as the PowerPoint slide is portending here, we are the world's, so far as I know, one of the only companies, if not the only one, I know exclusively for the trading platforms that we support, providing tools that allow traders to see things in data that I don't think banks were hoping we would show you. My experience over the past 10 years, we've been in business now 10 years this past May, has consistently shown that 90% of the time, 90% of the traders are losing 90% of their accounts in the first 90 days. No matter how many people I talk to, whichever market, if it's futures, stocks, options, Forex, ETFs, the number is almost always identical. 90% of people at any point in time are on the wrong side of the market. And it kind of begs the question, why isn't it 50-50? You would think in the world of statistics that at least half of the people would, if you just flipped a coin, be right. And so what I've determined as a result of that is that the game is rigged. We're attempting to play a game that is rigged. Jim, which market were you watching with the timestamp spot on? I'm going to go over a few of those. NQ 1 minute. Yeah, we're going to look at that here today. And so we've evolved to stay at pace, in pace, in keeping with the rigged markets. And if you're listening to me, if you're watching this video later on YouTube, you have an opportunity today to get in step with what markets are actually doing and not be part of those 90%. Jim, I wanted to ask you, I have a customer that was looking to talk to a Warp user, and I didn't know if you were up for a phone call from them, someone who's a pilgrim on that journey. And I can't quite get that screenshot for some reason to copy paste. Hello, Sharon. I don't know why it's not letting me copy paste that. Yeah, it's my side, it's not yours. You'd have to email it to me. I'll check that on the email side. Matter of fact, let me get that open in case that's something you want to do. Over here on Michael at Back to the Future Trading side. Yep, if you want to email me those, Jim, I can look at it there. For some reason, GoToMeeting's not letting me pull that out. I can see it, I just can't copy paste it. Yeah. So what we've done here today, if you're one of our existing customers, this is going to be a great time together. If you're a new customer and you're checking this out for the first time, you're going to see some pretty unbelievable stuff. And I just want to caution you, there's one really great slide that I've always asked people to sort of look at before we get started. And that's this one. Stephen Covey, the author of many books, studied the behavior patterns of successful men and women all over the world. He has this really great admonition. In John, Jito, Devinder, Jim, there we go, I see it. Here's what he says. And I find that no matter what I teach you here today, if we don't have this as our underpinning, none of what I show you is going to be applicable to your trading lives. And that's simply this. We assume the way we see things is the way they really are or the way they should be. Our attitudes and behaviors grow out of these assumptions. The markets are not what you think they are. The markets are not what you think they are. They are in my opinion, and today I can hopefully back up that opinion with some evidence, they are a playground or a giant washing machine for institutions and banks, the 1% that control over 50% of the stocks and equities in the world. They are a casino where blue-collar and white-collar people all over the world come to make logic-based decisions and put their money into markets, considering things like true values of companies and the underpinnings of economies and whether or not a country's GDP is healthy or not. And what we've learned in the last decade is that none of these things matter. The value of a stock has little to nothing to do with the value of the company or the products or services it's providing. Tesla, for example, can have a meteoric rise and then a parabolic reversal down because of a tweet or because of a short seller's rumors spread throughout the markets. We have evidence from hedge fund managers, their own testimony in recorded interviews telling us how institutional traders push the prices of stocks up or down ad nauseum at their own will. The markets are moving not in accordance with information available to everyone. The markets are moving based on rigging, spread rumors, manipulation, choreography. And so it's important before I continue and move forward that we recognize the reality of the game. If you don't recognize the reality of what's happening, you're going to play the game with an outdated, if not non-existent, imaginary set of rules. Okay? What I've done and what I've helped over 5,500 people around the world utilize is construct a trading analysis tool based on time. And so there are sort of two ways to analyze or project times. And I'm going to describe them briefly to you. One is allowing a computer to guess and project the times that are coming in the future. So you essentially create a digital guru. That's option one. And there are companies that do that. Number two, we train the computer. Let's try to spell right today. We train the software, or in this case, the computer, to find the times where banks are cheating. We train the software to find the times where banks are cheating. And to do that is really quite simple theoretically. We give the program access to historical data. And we ask it to find patterns in that historical data. Computers, as you know, are much better at discovering patterns than human beings are. I heard a talk earlier on a podcast on my way down to vacation. And all of the recent studies, for example, Pam, welcome, are pointing to artificial intelligence insofar as it being able to spot things in your radiology results better than human beings. Computers right now can detect if you have, for example, lung or prostate cancer with a higher accuracy rate than a human being. And Pam, do you know how it figures that out? Jim, what they taught the computer to do, it has access to hundreds of thousands of files. And the AI goes out and it looks and it says, this is what a file that had cancer looks like. This is what a lung that had cancer looks like. This is what a lung that had cancer looks like. This lung is clean. It did not have cancer. And then when it's looking at your X-ray, it's comparing what it sees to what it knows is a positive result. How many of you have heard about this recently? In fact, the podcast I was listening to said people in medical school are leaving the radiology field in droves. They're leaving the radiology field hard as they can run away from that. And so it stands to reason that if we took a piece of software and we trained it to find the times where banks are pushing up and down, we should see something important. In fact, for many of you, it's a window into a world that you've known existed but were never invited into. And so today what I want to do is I want to take you through that window to the other side where banks are making money. I want to take you through to the side of the wall where people are cheating. And I want to teach you how to be a cheater. You've heard the expression, fight fire with fire. And in this case, we're going to fight cheating with cheating. Only this is legal cheating. Everything we're talking about, everything that banks do, no one's going to jail for. No one's been convicted of. In fact, the overwhelming majority of times, institutions and banks never plead guilty when they're caught. They neither admit nor deny the allegations. They pay a fine, which is a small portion of their windfall. They contribute to the campaigns of the politicians. The regulators are people from their own industry, and the song and cycle continues. So how exactly does data mining work, and how today have we proven for you, beyond a reasonable shadow of a doubt, that it in fact is profitable? And so to understand that, we require the use of a calendar. We're going to take you inside the mind of a data mining algorithm. I'm actually going to teach you how the software works. Most companies won't do this. It's proprietary. It's black box. They don't want you to know what's behind the curtain. But I know that if I don't teach you this, you won't trust it. Today is a Thursday. And I gave you the forecasts for Wednesday and Thursday of this week for us to analyze. I sent the email out earlier in the week and said, hey, I dare you to come back and see if my projections for Wednesday and Thursday were correct. Well, what you might not have known is we've sent the software backwards into the past. In this case, looking at prior Thursdays to analyze what times markets have been pushed up and markets have been pushed down. And so when we go back across thousands of historical bars for prior Thursdays, when we go back across thousands of historical bars for prior Wednesdays, we receive a projection. And so in the case of this week, the email that I sent out had a link to those projections. And in your chat box, I'm going to paste a copy of that link if you've forgotten where that was. And these are updated at this same link every Tuesday by Tuesday evening. So if we scroll all the way down here today, you'll see for the NQ 1-minute chart a pictorial representation of what was expected for today's market. And in a second, we'll go over what one customer today did with his projections in the NQ and how this is in reality being applied with live accounts, so far as this customer is sharing with me, based off of this information. So what does this chart represent? What does it mean? When we've asked the software to go back across thousands of historical bars, and when we've asked it to find behavior patterns where banks have consistently cheated, it's giving us two pieces of information: the information above the middle line and the information below the middle line. All of the times below the middle line represent an aggregate of behavior patterns. The banks have consistently enough tipped their hand. They've consistently enough moved and manipulated markets where our computer found cancer. Our software looked at the scan, right, and said, "Danger, Will Robinson, danger." It noticed a mark in the scan. And so every one of these times represents a tumor, a time where banks are consistently cheating. And by cheating in this case, below the zero line, Paul, the computer through the software, has discovered a consistent effort to push prices higher at 736, 808, 839, and so on. Okay? Everybody with me so far? Now, there's no guarantee that these times will move in the future. There's absolutely zero guarantee that when we get to them in the future that there will be a move, unless your father is Warren Buffett or you have access to Trump's Twitter account. We can't move markets. So the great experiment here today, Mike, is when we got to these times on Thursday, having given them to you in advance, were any movements upwards detected? Conversely, all of the times above the zero line were tumors, spots that our software discovered in the scan, spots that shouldn't exist, meaning if the banks were playing fair, then, Mike, we shouldn't have any hits. Bob, we shouldn't have any consistent results. There shouldn't be any spots or any tumors. It should look random. There shouldn't be any consistent moves down at 802, 831, 855, and so on. Okay? So now, in a moment, we're going to look and see how did one customer generate money using that system. How did one customer take a graph like this and apply it in a way where he consistently profited? That's really why we're here. Before we do that, I want to take 3 minutes to discuss a trading system that we can deploy to spot and see whether or not these times are working. And the system that I teach new customers who have no rules, they have no consistent strategy, they've never been taught to be mechanical when they approach markets with discipline, is based on two premises. And I'd like to go over them with you here briefly in the next 3 minutes. Signal number one says, if we arrive at a buying pressure time in the direction of an uptrend, we're going to set a stop distance fixed from the low of the candle. We're going to enter at the close of the candle and we're going to hold our position until the counter trend signal arrives. And so what we're hoping will happen, we're hoping this window will open up in time. We're hoping that banks will open up the vault and allow us to take money from our longs. We know from the software where the histogram starts at a buying pressure time, and we know from the histogram below where this window should close. And so if the software is doing its job, if the banks are in fact cheating, and we go long inside of this window, then this should be a net gain. Or we should have way more money at the end than at the beginning. So now, at the end of this, hang on one second. Of course, everything is reversed if the market is moving in a downtrend. Chris, does that make sense? If the market's moving down, we're looking for selling pressure signals. We're selling until the next buying pressure signal when these windows open up. Now, can you use confirmation tools? Can you use order flow analysis and volume spread analysis and support and resistance levels and zones and all of those things, trend line breaks? Yes. But we're doing all of those things inside of a timing window. Yes or no? Does that make sense, everybody? Anybody lost at this point? Okay. Is this thing on? Can you guys actually type into this? Feels like everybody's sleepy here today. Everybody clap their hands. I can't hear you clap your hands. That's a joke. Okay. So this is option number 1. Option number 2 is actually based on a failure. Option number 2 is based on a failure. What if now we arrive at that counter trend time? What if we arrive at that counter trend time? And now we have our dot or our stop, that same fixed distance above the candle. So let's say this is 10 ticks underneath. This is now 10 ticks above. This next trade in my YouTube videos and in the classes that I teach is called a puncture failure. If the trend is up, then we want to make sure, RJ, that nobody is going to kill us when we place a long. We want to make sure that anybody who can oppose our long position is not capable of hurting our position. Does that make sense? I want to make sure when my long goes into the market, when my contract is purchased, that no one is sitting there diabolically plotting to reverse and go the other way. And so one of the ways that I accomplish that is by watching this time. I'm watching what's happening at this selling pressure time, because historically, the software has told me when we get to this time, there's usually a concerted effort to push prices lower. That happens so often that down below on my histogram, there's a time telling me this is the time they usually sell. So now, Joseph, I want you to think about this. What happens instead if the market starts to go this way? Joseph, what happens at the selling pressure time if there's a complete abandonment of a down move? What if instead of seeing a down move, the market continues to rise higher? What does that tell you about the institutional commitment to that move down? It tells me that there's a very high likelihood that they've abandoned the behavior. They've abandoned the behavior pattern. They're not, it's when you get married and you're with the same person for as long as I've been with my wife now since she was 17. We've been married together, gosh, almost 25 years. The worst fights, Ian, are the ones where my wife says, I'm not even going to argue with you. This isn't worth fighting over. When she's right, she's just tired and lets me get away with something. Why didn't you wash the dish that was in the sink? Well, I didn't want to. I'm tired. Well, I'm tired too, and I don't have to wash everybody's dishes. You know what? It's not even worth fighting over. She doesn't put up a fight. She just washes the dish. It's unfair, I know, but it's a really good example. When somebody doesn't do what they're supposed to do, you go, oh. When we do that with our kids, if I let my kids play their video game too long, 2, 3, 4 days in a row, 4 hours instead of 2, when I ask them to stop playing the game so long, there's already a behavior pattern in place that I've reinforced. So if the markets continue to move higher through that stop area, it tells me, hey, nobody's opposing this position. It's a failure of that behavior pattern, and it's probably safe to try a long. And so one of two things can happen in this area. Number one, I can scalp just above, maybe 1 or 2 ATR values, 6 to 8 ticks on a 1-minute chart, 6 to 8 points on a 10 or 15-minute chart. Or I can enter with a stop just below the candle that punctured my line in the hope that the trend continues even higher. So there's two basic setups here. One, entries in the direction of the trend, and then two, punctures of counter-trend signals with trend. Does everybody understand? Okay? Now, let's go back and look at a few examples based on today's markets. Scroll back here. Let me find our histogram page. Thanks for joining me here today. I'm really excited that everyone gets to see this. Exposing the truth of what banks do is an incredibly gratifying experience. Okay, so on my chart here today, you'll see that I have a swing strength of 8 for those of you that are our customer. And I'm telling the computer to go back 7 days and 14 days historically. 7 days and 14 days historically. So I've told it to go back 1 week and then 2 weeks of Thursdays. And that's all I've given it in terms of information. Those are the places that it has permission to look for patterns. One of the things that I want you to notice before we continue is that my output for the chart is predictive. All of the signals that I'm waiting for are sitting on the right-hand side of the chart. And so I have the times for tomorrow ready to go. I have the times for Monday, Tuesday, Wednesday, and Thursday of next week ready to go. My charts always have an early warning alert system letting me know what times to pay attention to. So in the case of the NQ this morning, I want you to take a look and see what happened. At 9:27 this morning, Jim, I had a candle close below the moving average. and the candle closed below the moving average was at 927. My software told me at 927 there was a chance of a short window until 934. On my chart, I'm using a 120 period exponential moving average, 120 EMA. And I've used that same moving average now, gosh, over 10 years. Somebody taught me that value. Their uncle, I believe, was a retired pit trader, and it just stuck. I found that it works really well at helping determine trend. In many ways, it's like a 200 period moving average that people use for stocks and options and judging whether a stock has a healthy uptrend or downtrend. So at 927, in this case, you'll see that I've set all of my dots the same distance from the highs and lows of these candles. And now I put myself in this window from 927 to 934. And that one signal, when I got in and got out, hypothetically was worth $23.50. Now, at 946, Jim, it doesn't work out. And I hit my stop. I give back 10 of the $23. 934 turns out to be an up move. 934 turns out to be an up move. So we're just going to track the signals with trend, and then we're going to come back and look at the punctures. What would the puncture have done? Okay, so while we're here, I taught you the two. Let's go about it really quick. So at 934, can everybody see it punctures that white line? So I put my stop just above the puncture candle. I'm testing to see if the market will continue to go down through that line, if it's a hard sell-off. And in this case, I miss it, and I give back $5. 10 o'clock comes, there's a small up move into 10:04. At 10:04, the market moves down in my favor $10 right away, or about $200 per contract. There is also a pullback, and then it finishes lower by 10:14 of only about $40 per contract, $2 of a move in the NQ. And now, Jim, look, I have another example of a puncture. My moving average is going down. The last time they defended 934. They defended 10 o'clock. I'm going to test 10:14. And at 10:14, the market breaches the line, and I'm looking to see, are they going to fight or are they going to give up? Are they going to wash the dishes because they're tired of fighting, or are they going to put up a stink? And so we go short at the white line. Our stop is one tick above the puncture candle. We hold the trade until what? Our next sell-off time, which is at 10:28. And that yields another $14. So 10 points, that's another $280, $250. 10:28, we have a selling pressure window. 10:28 is a signal in the direction of the prevailing trend. The winds are blowing south. And we have a 4-minute window for the trade to develop. If we enter at the close of the candle and we exit by the next window, that's another 2 points. 10:32, I'm looking to see if they're going to defend the area. At 10:32, the market goes into a consolidation phase, and then, Jim, they hammer through the low. And so using the puncture technique, the puncture failure, it's safe for me to go short until the signal at 10:40. And so we accrue another $5 move. Now at 10:40, we're looking for a short window, another continued down move. And right here, Pam, you'll see that it fails. And we give back $7.50. So up until this point, we have 23, 25, 39, 41, 46. We'll walk that back now. 39, 29, 24, approximately $23 or $24. So up until this point in the market, per contract, we're up approximately $400 per lot. We're up approximately, hypothetically speaking, $400 per lot following two very basic entry and exit protocols, two very basic signals. And all of these are based on times that we knew about far in advance. Let's go ahead and blow this up. Template, save, default. Any questions about these entries so far? Now, that's not to say you couldn't take counter trend reversals. That's not to say you couldn't try to go long at the white dots and go short at the blue dots above. That is to say, however, with one very basic entry and exit system, we're seeing consistent profits as we take money away from the banks. Does that make sense? So in this case, everything is reversed and flipped upside down. Okay. The very next signal is the 1105 signal. And you'll see when we get to 1105 that they initially defend that position. In fact, 1105 turns out to be a reversal. But Melissa, I want this to be a safe zone. I want to only get in when my positions are safe. And so I catch the next drop down through the line, and I initially get almost a $10 move. Here it's 8 3/4. But then that one comes back and finishes a quarter tick in the negative. Okay, so I basically finish where I start. We get to the next signal now at 11:24. According to the histogram, I have a 13-minute window where the vault should open. And Paul, that vault should be filled with shorts. And so using the same technique and the signals that I gave you in advance, we have a down move, and we accrue another hypothetical almost $10 per contract. 11:45 arrives, and you'll see that we're touched to the tick at our stop. We give 7 of what we gained back. 11:53 comes, and that signal drops down another $3. So we have, let's say, 10 plus 3 plus 6. So 10 minus 3, 10 minus 7 is 3, plus $3 is $6. That's another $120 per lot. So by lunchtime, with one contract, we're up $520 theoretically per lot. With 2 lots, the average size of the smaller contract trader, that's nearly $1,000, Gavin, per trader, using signals that we had in advance. Do you only trade off the 1 minute? No, John, actually I don't. In fact, you'll see examples here of 3 minutes and 5 minutes, all the way up to a daily chart in a second. It's important to note, and that's a great question, one of the reasons why I show a 1 minute chart, John, is because of this. The smaller the time frame, the more chances I have to show you in 1 hour that this worked. Does that make sense? Okay? So if I show a 1 minute analysis, I'll have 30 signals to go over with you. If I showed people this example on a 15-minute chart, I may only get 3 signals. And if 2 out of the 3 work, you go, eh. Or if I gave you 4 signals and it was 50-50, you'd say, eh. So I can take this analysis and I can go to as high a time frame or as low of a time frame as we want. So for example, let's see if I can pull up my ES chart. John, this chart is the E-mini S&P on a daily time frame. This chart is the E-mini S&P on a daily time frame. So here's since August, right? This is the same resolution, the same accuracy rate as what? The 1 minute chart that we were just looking at. Does that make sense? So the last push on the ES, we had a signal for Thursday, June 6th. And so, John, using that same technique, you'll notice as we come into June 14th, we have an 8-day window. And that signal was good for over $40 per contract. Okay? If we walk it up, you'll see that that was a $60 signal. This one was a $17 signal. And this one at the all-time high actually goes up $35 before it comes back down. So I would call that a break-even trade right here. Tuesday on the 7th of May, the software warns us to see a down move. It moves down $21. And then we come down here and actually touch the moving average for a net loss of 65. The next signal on May 17th drops down $47 in our favor. Then this signal here is a net loss of 42. If you take the crossover, remember that puncture failure? That's a net gain of 32. Then we have a short signal here where we give that back, 39. Now we have a $43 move. And Jim, here's that same signal I showed you on a 1 minute NQ chart. And can you see if we took the puncture there, we're up $30 on that signal. So on a daily time frame, and this will blow your mind, I'm going to show you where we're looking at to get these signals. 60, let's call this 20, 80, 100, 150, 180, 220, 250. Minus 40 is 210. Minus 40 is 170. Minus 65 is 105. So $100 times 50 per contract. 100 times 50 is, what is that, $5,000? Very hot where I am right now and my brain isn't working. Yeah, so $5,000 per contract on a daily chart. Now, here's what will blow your mind. These signals, I've loaded 10,000 historical days. And Jim, I've told the program to go back 45 days, 90 days, 180 days, and 360 days. 45, 90, 180, and 360 days. So every one of these signals is an aggregate of those 4 data points of analysis. And you'll see off to the right, I have the times waiting for me. So we can hold this long, for example, until June 26th. The next long opportunity is at June 26th. The next counter trend signal is at July 13th. And so I can change the instruments, right? I can look at different markets and start to analyze them on larger time frames once I have a pocket of accuracy that I'm comfortable working with. So if I change this to the EURUSD, for example, I can send the computer back in time and see, do those 4 data points yield anything worthwhile? Does it give me anything worth looking at? So one of the important answers to that question is, this will work. We have customers using this on 5 and 30-second charts, all the way up to daily and weekly charts, using the same tool. And so across those time frames, we generally see a 60 to 70% accuracy in terms of, relative to, seeing what we expected to see happen at that time. And it's important to remember that time is fractal, which means the patterns that we see on a 1-minute chart, we're going to see on a 15-minute chart, we're going to see on a daily chart, and we're going to see on a weekly chart. So right now, John, that program is running 10,000 historical days of EURUSD daily data. That'll take us back into the 90s on this chart, if I'm not mistaken. Does anyone have any questions about the capability to go higher or lower on the time frames? One other thing to note. Okay, so John, here's the EURUSD using that same analysis. Would you agree with me that using that same analysis gets us at a relatively high prediction rate? Every one of these dots used to be an orphan dot. Okay, the last signal here on Monday on the 17th was supposed to be a down move. We had 3 sustained days of pushing down. In fact, it was probably off 1 day from the close below the moving average. So John, if that blue dot was right here, you'd be like, oh my God, that was amazing. So we're within 1 day of the drop off. Okay. Now, when I see a punctured blue line like this alerts me to the fact that the trend is probably going to reverse and go on the other way. So this chart is a 10,000 day data series looking back 45 days, 90 days, 180 days, and 360 days on the EURUSD on a daily chart with a 100 pip tick offset. Okay? So it doesn't matter what the time frame is. John, you see how it looks the same on a 1-minute NQ chart? So this afternoon, you can see that we had other opportunities after lunchtime, as late as 3:13 in the afternoon. John, the trend is up. The EMA is up. It's white. And now I have a window that lasts from 3:13 Eastern to 3:38. That's a 25-minute window. And so I have permission to keep my fingers in the cookie jar that full duration of time. You'll see at 3:38, using a signal that we've known about for days, the market actually comes in. The banks, the algos, they defend this position. There's a marked double high, double top right there. If I accentuate the chart, you'll see it. But then, John, I want to see when they've run out of steam. And right here, you'll notice there's our puncture trade. And so we go long at the cross of that dot. They've run out of steam. They've got nothing left. Those of you that remember boxing legend George Foreman and Muhammad Ali, he used to let Foreman punch and punch and punch and punch. How many of you remember what they used to call that with Ali? Muhammad Ali used to use a very specific technique that a lot of boxers use to this day. They called it rope-a-dope. And he would lean back into the ropes, Pam, and let the other, usually out-of-shape boxer punch and punch and punch until they were exhausted and they were just hitting his arms. And when they were done, that's when Ali would come and start to throw his famous punches. And so here, the institutions are done selling. We're going to test that area. Our risk is right below this candle's low. My window lasts until 352. And at 352, there's another $7, $6.50 waiting for me. And over the course of all of those signals, Jim, can you see what happens when I get in and get out? These windows open up, and they're either small losses, net gains in the case of the NQ, or in the case of this trend trade, a $12 runner. Any questions about the NQ 1-minute chart? There were other examples of this today. The one that I was using for my setups included the YM on a 3-minute chart. Jim, does this look like a random market to you? Does this look like a market that happened accidentally, Chris? Is this data from all trades or just larger bank trades? Chris, this data is from all the movements historically in the past. Okay, so let me go into this 1 second so it's crystal clear with you, okay? So, Chris, what market do you trade? No, it's my pleasure. What market do you trade? What's your favorite? I know you probably trade a basket of them, but what's your favorite one? We'll use yours as an experiment. NQCL. Okay, perfect. So we'll look at a CL chart. So, Chris, I want you to imagine you're part of a message board, and some guy types in and he says, hey, at 10:11 every day for the last 2 weeks, CL has fallen, let's say $1.50. And you go and you look on your chart, and sure enough, at 10:11 every day for the last 2 weeks, CL falls $1.50. Is that something you'd probably act on tomorrow? Would you maybe trade it with a 10-tick risk at 10:11 to see if it falls $1.50? It's ridiculous, right? Doesn't sound right on face value. But let's say historically, you said, let me check that out. And you went back on your chart and you look and you see at 10:11 Monday, Tuesday, Wednesday, Thursday, and Friday it does that. Chris, tomorrow would you be inclined at 10:11 to short CL to try to get $1.50 move if every day for the last 2 weeks CL fell? No, John, I'm just using 10 ticks as an example. I'll risk $100 to see if I can make $1,000. And that's all you needed to do for the last 2 weeks. Too little detail. So Chris, you're telling me, and I don't mean to shame you, if we looked at 2 weeks of charts and you saw at exactly 10:11 for 10 trading days in a row, this pattern appeared. 10 days in a row, you wouldn't try on day 11 to catch that move again. That's what you'd expect all of us to believe here today. Okay. So now, I think I'm getting through. So Chris, I gave out the times for CL on that web page that I gave you in advance of this market opening. Does that part make sense to you? You know I can't take it back, right? No take backsies. Okay, so if you look at this chart and you see here where it says 851, so I'm going to circle it while I've got you here. I need you to think this way if you're going to be more profitable than you are. The computer, via the software, is telling me, Chris, let's say it's talking to you, it's saying, hey, Chris, when you get to 8:51 on Thursday, you need to be aware of the fact that I, an unemotional, completely logical, absolutely detached piece of software, have discovered a temporal anomaly. Now, it's not every day for the last 2 weeks, but where you've asked me to look, I've noticed that banks almost always push price higher at 8:51. And that move generally lasts until 9:53. Does that make sense? So we have a completely objective, scientific, reality for whatever reason. Don't get into the why and the how, because banks want you to start to think, well, why do they do this? This showed up on our scan. Now I want you to look over here. Here's 851. On my chart in real time, that line was waiting for me. Okay? So everything you see on this chart, Chris, right here, is what's waiting on my real-time chart. To the right of this dotted white line are more times in the future. And so when we come now and we look at this signal, I want you to apply what I've taught you, two very basic signals. At 8:51, here comes our 10:11 time. Only this case, Gavin, you can see, at 8:51, that candle closes. It's a 3-minute doji. Indecision. And then we have a window that lasts until 9:33. And Chris, that window produces a 60-tick, more than 60-tick opportunity. The next signal arrives at 9:54. And at 9:54, I give back some of what I made. 19 ticks disappears. Now the trend is up. I have 2 games that I can play. I've played the first game twice. Signal with trend, good. Signal with trend, fail. I made 3 times what I lost. 10:12 comes. I want to know, when is it safe to enter this trend? At 10:12, using a signal that we had before the market opened, a completely unemotional, objective, statistically significant answer to the question, when, is undefended. And we pierce that line. And there's no energy left from selling pressure. The algorithms are not fighting back. Goldman Sachs is not selling. JP Morgan is not pushing short contracts into the market. I'm in. How long do I hold it for? I'm safe from 10:12 until 10:48. From 10:12 until 10:48, that is an $81 move. And if we come through and we add up the rest of these really quickly, Chris, do you notice how most of the time it works out for me? Plus 60, plus 80, plus 12, plus 4, plus 7, plus 2. Minus 18, minus 19. Well, all of that was based on what? A signal that I had before the market opened. So right here, if I scrunch up my chart and I push it off to the right, Chris, look at all these signals that are sitting here. Just take with trend. Chris, do you see how there's signals waiting for me tomorrow right now? There's the European signals. What should be ridiculous to you is that what you see here is what I had on my chart this morning. I had no signals on my chart. I had no bars on my chart this morning. And Chris, at the end of the day, does this look like a market with a plan? Does this look like somebody had a plan before CL ever opened today? Most of the time. How could we be that accurate? How could we know that much detail about the structure of the most unpredictable market in the world? You have tankers getting blown up in the Strait of Hormuz, sabers rattled over war with Iran. And I'm showing you bottom, 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 top, 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 bottom, one candle off the top, bottom, top. Chris, how can we be that lucky? It's impossible. Do you want to see something crazier? This was yesterday. Chris, can I be that right 2 days in a row on CL? Can I be that lucky with signals that we publish in advance? Look what happens at these times. Now, take what you know about your setups. Chris, what if you applied your confirmation indicators at these times? What if your signals were telling you short the same time these windows lined up? Does that make sense, everybody? I can't be this lucky. We can't have these many successful trades in a row over and over and over again. It's not possible. So whether it's a daily chart on EURUSD over time, signal after signal after signal, we have the signals waiting for us in advance. Whether it's a 3-minute crude chart, whether it's a 1-minute NQ chart, the signals are all producing the same thing. So Chris, continue with me on the NQ, right? Your other market of choice. I wait for my puncture. I'm trading through lunch now, right? It punctures the white line. That signal closes at 12:11. There's another $200. So we're up to $800 per contract. 12:11 is the next short window. Chris, how far down does it go at the close of the 12:11 signal? It eventually goes down another $27, excuse me. It finishes where it starts. Does that make sense? And so over the course of the entire day, we're making more money than we lose following the time signals from below. Make 20, give back 10. Make 30, give back 7. Make 60, give back 15. And it's all based on a game that the banks are playing with your lives. Does that make sense, everybody? I can do this on the euro US dollar. I can do it on the pound dollar. I can do it on Amazon. I can do it on Tesla. I can do it on Google and Facebook. I can do it on Netflix. Can you use a trailing stop? Absolutely. Chris, what I wanted to show you here today, and I hope that I've shown you all here today, is the absolute most basic possibility. Does that make sense? I wanted to show you the absolute most basic, so simple even a caveman could understand it. Yeah. So John, a good rule of thumb for a distance between the dot and the candle is at least 1 to 1.5 ATR values away. Do you know what ATR means? Average true range, the indicator in your list. That's approximately how far the market moves in 1 unit of time. So if your average true range is 10 ticks, you want to have between 10 and 15 ticks between you and the candle. Any more than that is too close. Or, I'm sorry, any closer than that is probably too close and aggressive. Okay. So what we've been able to show you here today conclusively across 2 historical days of data. This is crude futures yesterday. And Chris, this was the crude inventory report release. You know this. So Chris, if it was ever going to fail, it was going to fail yesterday, right? There's no way we could predict this. 536 down, 612 up, 636 down, 724 up, 803 down, 842, 1, 2, 3, 4, 5, 6 candles. It sticks there for almost a half an hour in the same spot before it drops. 912, Chris, straight down. 936, straight up. 1009, it pushes down. You're out before the inventory report. You're not trading this. 1051 is a failure, a stop out. 1115, straight down. 1142, up. 1227, down. Breaks through the line. They hold the bottom. They push back up. 154, and then Chris, right back into the double bottom. 254, straight up. Small defense at 336. Markets are closed by then. Chris, is that a rigged market? How could we know this before it opened? And we've really keyed in on what Chris has said here, and I want to exemplify it because it's what's keeping you from being profitable. Here's what Chris just confessed to me. I'm going to share it with everybody. And Gavin, I'm getting ready to close right here. Image.
I was about to do that same exact thing.
Chris wrote, I really don't want this rigging to be real. I really don't want this rigging to be real. In essence, what you're confessing, in essence, what we're discussing, is a reality that is hard to face. And here's the reality. No matter what I've learned or how intelligent I am, how much I've invested learning to trade, in the end, very powerful men are using my funds like pawns, playing a borderline illegal game that's fixed before I enter it. Chris, that sucks. Paul, that's a horrible feeling. It's absolutely devastating. No matter what I did, no matter what my tools or guru or system taught me, Michael, you're telling me that that was going to happen anyway. Yeah. Here's the mini Dow. Chris, you can see the signals, the few that I took today in the Dow. 2 winners, 1 loser. In the time that I had, I could have shorted at 1042. I could have shorted 1136. Chris, I could have shorted 1209. I got to my computer after eating lunch, and you see where I bought? I bought from here to here. Chris, at 318, I had 1 contract short. They didn't go short. It came up here. I sold a second contract using a technique that I teach people. And then I finished right around break even with my added in. So this was my loser right here. But then at 154, Chris, I got in with my 2 lots and I held it to 233. And then Chris, I had my moving trail stop underneath this moving average. And do you see where I got out? Right here at 336 as we were coming into the close. So Chris, I had this wave. I sat this one out. I knew I had to wait from 233 to 318 for the selling to figure out. And then 318, Chris, was my next surge to 336. Is that a rigged game? Yes. Did I cheat with everybody else? Yes. Did I go long when every other retail trader was probably going short? Yes. Did I go short when every other retail trader was probably going wrong? Yes. I don't care. There is nothing moral about this. There is nothing ethical about this. If you want to be ethical, there are plenty of nonprofit organizations that you can join and contribute your money to. Statistically, you have a 90% chance of losing everything you invest in your trading account. Do you understand that? And Chris, honestly, I don't care what you want to believe, and I'm on your side. But I tell my kids the hard truth of life. When my oldest son started working at his first job, he came home and he said, Dad, I'm getting blamed for things I didn't do. This guy in the back keeps telling the manager I did stuff that I didn't do, and I didn't do stuff that I did.
That's life. Guess what? You better learn real quick how to deal with that. This is life right here. This trade was up over $800 per contract from this signal that told me it's safe. It's safe from here to here. And then, Chris, I have to ride out the selling and the consolidation. And if I can hang on until 318, the next wave is coming until 336. And I was in all three of these waves. And I knew when the selling was going to occur. And John, I use a 120 EMA because that's what I was trained with. If you want to use something else, you want to trade counter trend, I don't care. Use the signals to filter what banks are inevitably going to trick you into doing the opposite of. Right now, almost all of you get in a trade and it goes the opposite direction. Almost every one of you gets in a trade and it goes the opposite direction. Wouldn't you like to know before the signal gets there what it's going to probably do at that time? I'm offering you a solution. I'm offering you a window into what these banks are doing. And it doesn't matter if it's a 1-minute chart. It doesn't matter if it's what I hit 4. I meant to hit 5. I can analyze it on any time frame. I can look at a 4-minute chart. I can look at a 5-minute chart. John, there are fewer signals the higher that I go. I can go out to a 60-minute chart. And the signals are all the same. If you look at a 60-minute chart on the NQ, what do you see here? Can you see the windows, John? Long from the close until 10 o'clock the next day. Watch for selling pressure until 2 o'clock that afternoon. Selling pressure from 2 o'clock until 8 o'clock the next morning. Selling pressure from 8 o'clock to 3 in the afternoon. Buying pressure window from 3 o'clock to 6 a.m. this morning. Selling pressure from 6 a.m. to 11 o'clock. Then the buyers are supposed to come back in and drive it up until 4 o'clock. Selling pressure from 4 o'clock today until 7 a.m. Friday. John, how is it right that often? It's not a question of right or wrong. It's a question of tracking what the cheaters do. This works on every time frame, on every market. If you would like a portal into that world, if you would like to know when the banks are most likely to do these things, if you would like to see your profitability go up, lose less than you make, right? Let's see if there's other signals here. Here's the E-mini S&P from today with today's signals. John, that's as rigged of a market as there is. And I knew the times to be looking for shorts. I knew the times to be looking for longs. With all of Donald's tweets, we have customers sending their results, telling us how profitable they were today just using the times. Do you cover the customer's results on the NQ? There's one guy here today right now, RJ. How do I log into this? I'll show you what he sent me. His name is Jim, and he likes to tell me how he did. Excuse me 1 second. Yep, I can't, my computer's starting to lock up. Stand by 1 second. Yep, I can't get into my email for some reason. Okay, guys, RJ, I can put you in touch with him if that's somebody you needed to talk to, but it just works. Guys, I'm going to turn this over to my good friend Gavin, who's going to talk to you a little bit about how you can get the software for yourself. But I want you to think about this before we continue. Chris, I already have the times for CL. They're waiting for me over here. as I scroll up the chart and I look forward to the right, I already have those times for tomorrow. They're waiting for me. John, they're waiting for me now. Everything we do on the right-hand side of the chart, we own it. If you would like to know what to expect when we arrive at a certain time in the future, your brain doesn't work this way. Banks know this. You need to cheat. You need to enter into that universe. You need to let the computer do the work for you and expose you to the information so that you can make a good choice and not be on the wrong side of those signals.